Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the new week, the fourth week of the month of May. It is from 22nd to 26th of May. Today we are on 22nd. During this Asian Session Live Market Analysis and the Forecast webinar, I will do the live market analysis and give the forecast for this week, how exactly the currencies are expected to behave during this week. Then I will also do the market trading in order to fine-tune the forecast and explain briefly about the trading strategy which you can follow in order to limit the risk and maximize the profit. When we look into that of last week move, I was telling you on Friday that they are expected to make the drop on Friday US session. But what has happened in the market is they've been holding high Euro and GBP on Friday and firmed up towards close to the new high. So that indicated that it has deviated from the expectations, but it was telling that predominant of the traders were short sellers. Hence, the players squeezed the market upward, induced everybody to do a short covering, and automatically they just offloaded their position at the higher level to that of the short sellers. That's what happened. So this week, what is expected to happen? They are expected to make the sideways move in the case of Euro and GBP today, and then subsequently they are expected to make some corrections. We will see the forecast. So today, it is the fourth week of May. They are expected to make the swing and rise moves in the market. And today they are expected to make a brief dip and firm up during that of the Japanese session, and a swing and drop during that of the European session, and swing and firm up during that of the US session. So either way, they are expected to make and spread, increase the spread. The low they could breach, the high also they could breach during the day. Then afterwards, tomorrow, they are expected to make the swing and slide, then swing and firm up during that of the European session, and make the drop during that of the US session. Why this sort of moves are happening in the market? Because they are doing the middle level consolidation with either way stop-ins. So in that process, they just quickly gain the level and hold high and build a sell position, drop the market, and induce the traders to go in for short selling, then gain again and build a sell position, drop and buy back, gain again and build a sell position, and then make one extended downward stop and before making a big rise to that of the higher level consolidation with frequent upward stop end. That is what happening now, middle level consolidation with either way stop-ins happening in the market. So in that process, what they do is they hold high and build a sell position, drop and buy back. Then again, they are expected to make swing and rise, firm up and rise on Wednesday. Then Thursday, they are expected to make the slide. Then on Friday, they are expected to make the dip and firm up during that of the Japanese session, swing and rise during that of the European session, induce the short sellers to do the short covering, and then drop, induce the long holders to liquidate the long positions. So either way, they will try to punish the traders during this. In the process, what they do, they buy low and sell high, book profit, and sell high and buy against that at the lower level to book profit. So why they are booking profit? whatever they have done during that of the lower level consolidation with a frequent downward stop and what they are accumulated the positions, they are lightening their positions holding high in the middle level before making further rise. Why? Because they need to book profit with regard to the holding position and start buying at the lower level, and those buys should be less than that of the current market level by adding the profit what they do it in the churning. Then subsequently, when they buy at a higher level and rise the market to the higher level consolidation level, another 300 to 500 pips, what happens? Their buys will be still lower than that of the market level, so that any time they can exit without hurting their capital. So that is why they are doing it like this. So they are making the middle level consolidation with a frequent either way stop ends. So in that process, upward stop and take a sell, downward stop and buy back. Upward stop and take a sell, downward stop and make a buy. And then finally, they will gain the level to the higher level. Those what you have purchased during that of the extended downward stop and you can hold at the lowest level, and then when they continue to rise to the highest level and hold high and build sell position, at that time you can liquidate your long positions. So that way you can do either way trades and follow the forecast carefully. Understand that players are not here to just to gain the level or lose the levels in the currencies. They are here to book profit. So when they need to book profit, automatically the traders should lose. So for that, they are inducing the traders to follow certain methods and to read the market. And when the traders turn bullish, they drop. When the traders turn bearish, they rise the market and trap them. So keep in mind, the traders are also equally trying to be smart. So they try to avoid committing more position. Then the players find that they are forced to do prolonged consolidation in order to get the adequate volume of their positions. That is why you find the market is making sideways move for a longer period. Coming to that of the levels in which the currencies are expected to swing, euro could form the low as 1.0850 and the high could be 1.1225. Not much of a higher level might be seen in this week. Then GBP could go down to 1.27 area, and then the high could be 1.3075. When they are holding like this, they only make a stop end of a brief upward move above that of the initial high. Then in the case of yen, they are expected to make either way moves. Similar to last week, they could come down to 110 and then start gaining the levels. Then in the case of CHF, from 97 area, they are expected to go to 99 area. In the case of Canadian dollar, from 1.36, they are expected to come down to 1.32 level. Australian dollar from that of 0.74 to 77 level. So when euro and GBP are making the slide, USD CAD and Australian dollar are expected to make the USD weakening move. As we have seen last time, that when euro and GBP were at a lower level, when they are becoming stronger, Australian dollar and Canadian dollar were making USD gaining move, when euro and GBP were making the USD weakening move. Similarly, you'll come across euro and GBP making the USD gaining move. At that time, USD CAD and Australian dollar are expected to make the USD weakening move. So this is how they make it in order to handle the crosses. So that we need to understand by reading the market using the live market quote page. In the live market quote page, you can see easily that Euro, GBP, and Australian dollar are showing negative net change. USD and USD CHF and Canadian dollar are showing USD positive net. Showing the positive net change. So when the numerator showing negative net change, the denominator showing the positive net change, it is a USD gaining move. Slowly, they will try to bring in the contrarian move by making some currencies USD weakening, certain other currencies USD gaining. That sort of moves they are expected to make in order to handle the crosses. So that you need to understand before taking the position. Coming to that other market reading, I noted down the initial lows and the highs around 3:30 GMT. And currently, if you look into that other market, Euro formed the low 1.1183 and the high was 1.1210. They not breached the low or the high. Then GBP 1.2975 is the low, 1.3026 is the high. They not breached the low or the high. So it has made more than 40 pips spread. So they are likely to come down in the case of GBP first, because that is making more negative net change when compared to that of Euro and Australian dollar. Then USD and 111 is the low, 111.61 is the high. Here again they have made the spread more than 40 pips, and they are likely to make a small dip and then gain the levels in the case of USDN. Then CHF 97.25 is the low and 97.47 was the high. They just breached the high and went up by 1 pip, and holding below that, they are expected to gain the levels in the case of USD CHF. Then Canadian dollar 1.3510 is the low, 1.3541 is the high. They not breached the low or the high. Australian dollar 74.35 is the low, 74.58 is the high. They are not breached the low or the high. So in all the pairs excepting USD CHF, they are not breached the low or the high, indicating that the traders are expecting the trend to be set before making a commitment. And you know pretty well, the players create the market sentiment and induce the traders to commit positions and make opposite move to trap and earn money from them. Then the recommended trades for you. When they make a brief downward stop and of about 50-60 pips, in the case of Euro, you try to take a buy. And similarly, when they make a brief upward stop and take a sell, then keep the hedge order to limit the risk. You will be able to see nice profit during the day. Similarly, in the case of GBP, when there is a brief downwards, when there is a downwards extended stop and you try to take a buy, then when they make a brief upward stop and take a sell, either way you can do it. Whichever comes first, you can take the position. The other side, you try to keep it as a target. These are all the market timings. If you've got any question, kindly ask me in the question answer window, FX Trade Forex live video window. I'll be willing to answer those questions. Here are the market timings. Now we are in Japanese session. So it is from 0030 to 7 GMT is the Japanese session. 7 to 7:30 is the gap time before the start of the European session. 7:30 to 13 GMT is the European session. 13 to 13:30 GMT is the gap time before the start of the US session. 13:30 to 20:30 GMT. And 20:30 to 0030 GMT of the next day is the gap time before the start of the Japanese session. So that is how they're all naturally occurring time frame, and each session is subdivided into 3 as the early, mid, and the late sessions. So early and the late session they handle the majors, mid session they handle the crosses. Whenever the spread becomes more than 40 pips in a given pair, then those pairs the players are handling it. So now they are handling USDN and GBP. There you come across more than 40 pips spread. So they will be acting on them first. Then later on, they will go to other pairs. Okay, that sounds good. So on 26th, I'll come back and review the forecast, what I have given it, and tell you how exactly the players are expected to make the moves in the market. For the benefit of those who have joined late, I'll just show you the forecast. They are expected to make either way moves during the 4th week of May. Next week is end of May and beginning of June. So you know that monthly trend reversal time. So during the monthly trend reversal time, they are expected to make a very volatile move. This time it is going to be only 5 days of monthly trend reversal. So they will make extended stop and quickly during this particular time frame. So be careful during that time. Don't get struck with that unfavorable position. Then they may attract margin call for that. Okay, I see there has not been a quick drop or rise lately. Yes, they are not making the quick drop because they are holding high and building sell positions. But if you buy there, you have to wait for a prolonged period to book a nominal profit. But they simply hold it and create the bullish feel. But if you take a buy, you may get about 20-30 pips profit, but for that you need to wait for a long time. So instead, if you think that it's the highest level close to the high set for the season, so you try to take sell position, they gain about 30-40 pips and induce you to do the short covering. So they know how to trap the traders by simply testing their patience. So these are all the typical type of moves, what they do during the lower level consolidation with a frequent downward stop and then rise it to that of the middle level, then middle level consolidation with either way stop ends as a wide range stop ends on either side. Then they continue to rise to that of the higher level and make higher level consolidation with frequent upward stop end. And at that time, everybody will say that the market is so bullish, turn long and do buy and sell trade. You'll be able to make huge profit. That's what they will say. Traders also will find that buy and sell is working very well at the highest level for the season. But later on, you know that the rise takes a longer period in the market and the drop takes a shorter time frame. Because once they withdraw the support, the market collapses. That's what they allow the market to collapse. Any level you buy, it will not make profit. You have to forcibly liquidate and the market continue to drop. So that is how they try to do it after building huge sell positions. So now they are building sell positions. Any other question, please? Okay, how to trade Canadian dollar at this level? Canadian dollar, small pullbacks you have to sell. So when they will make upward stop and 35.41, you try to take a sell and keep the hedge order to limit the risk. And if you see consistently they are making the drop, they will reach 1.32 level, but straight they will not go. So they will make upward stop and before making a drop, upward stop and before making a drop. So what is the best way to trade Canadian dollar? When they are making upward, stop and take sell position. Watch and take sell position. Then the drop will give you the profit. Understand the players in each currency, how they are making it. And people call it as the behavior of the currency. So it's nothing but the behavior of the operators. Currency is inanimate. No, it doesn't have the life. So only the people who operate, they got a style of operation depending upon the volume. So if the volume is moderately less when compared to others, the players make either way stop-ins to build the sell position. Then afterwards, they make a brief upward stop-in and then start making the slide to the next level, lower level. Then consolidate there, and those who have taken the long position will liquidate, the players buy. Then again make a firm up and hold high and build sell positions. Then a brief upward stop and then drop to the next level. That is how they do it. Okay, any other question, please? So the levels in which the currencies are expected to swing is shown here in this week. So upside is much limited in the case of Euro and GBP, and downside potency is moderately higher. Okay, you want to see the recommended trades. Okay. The recommended trades are given here. So when they make an upward stop and try to take sell position above that of the high, when they make a downward stop and try to buy, because the downward stop and will be a longer downward stop and upward stop and will be brief. So that is how they drop and buy briefly and again gain the level and make an upward stop and hold high and build sell positions. So understand what trick they are doing it. So you have to unfold the trick. Only then you will be able to understand what the players are doing. So for that, you need to have a calm mind to understand that. First of all, you should have the acceptance the market is operated. It is a man-made market, so men operate the market. Market cannot move on its own. Somebody has to move it upward or downward. They say it is a collective move of all the traders. The bullish traders push the market upward, the bearish trader push the market downward, all just to misguide. In your online trading platform, you continue to place a high level buy. No, it will give only the current market fill. It will not rise the market. Only in the bank, when you place a high level buy, it will push the market upward. Similarly, when you keep a lower level sell, it will push the market downward. So the players use the bank terminal to make such moves in the market. So it is manipulated, and people might say that it is not manipulated, but they are all part of the organization. They are supposed to convince the traders that it is a huge volume market, 4 trillion market, and obviously it cannot be operated. That's what they say. But 2/3 volume of the market is of the players. Only 1/3 is the traders. They do the circular trades, and that is considered as a volume, which is of no use because nobody is benefited out of that. And the players show it mainly to give the feel to the other traders that somebody is making a buy, somebody else is making a sell, and that will induce the scalpers to take participation in the market. So there again, they'll give a little bit of profit and grab the capital of such traders. That is why the scalpers remain as scalpers. When they continue to lose, they just scalp for 1 pip afterwards. They don't succeed at all, because the impulsive traders do not earn money from that other market. Only the calm-minded people earn money from that other market. That's why I always say that market rewards patience, not impulsiveness. Any other question, please, so that I'll answer to the question. Okay, fine. I'll conclude the webinar. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Friday, 26th of May, and review the forecast, what I given it, and also explain to you what the players intend to do, so that from time to time, if you understand and you are able to perceive by yourself the act of players, then you will be able to get rid of the market fear, and you will be able to do sensible trades and be an opportunity trader. Whenever they are making quick rise, take sell position. Whenever they are making quick drop, buy back against the sell. And you know that they handle the majors during the early and the late sessions. So wait for those time frame. And then when they are making upward stop and or a downward stop, and enter and exit in the market, you'll find you spend less time and earn more money from that other market. Wish you all the best in your trades. See you on Friday.